Hello and welcome. You're watching Business Today TV. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the latest cues from the day trade, starting from the benchmark index moves to sectoral action and all the stocks that are buzzing the most in trade. We'd get you expert views to find out where exactly should you be putting in your money in the stock markets, which are the sectors that you should focus on, which are the stocks that are likely to give you maximum profits as well. Everything that you need to know about where should your focus be in the world of stock markets right here. We'll get you with the expert views in a bit, but first up, a quick check on how the markets are doing at this point in time. We started off on a lower note and it just kept on getting even weaker as we cross this halfway mark through the trading session. Right now, 177 points lower on the Nifty 50. It's breached the 19,400 mark. It's hovering below the 19,350 mark right now as we speak, at the lowest point of the day. 0.9% of the decline coming in on the Nifty, which is the weakest link right here. Clearly, the financials, the Nifty Bank, that's over a 1% down in trade today. Nifty Bank is hovering 500 points lower. It's given a dip below that 44,000 mark. Right now, trading at 43,893 as well. Also, apart from this, when we talk about the sectoral action, a lot of sectors seeing pressure build up in the markets. All of the Nifty sectoral indices are down in the red today. So it is a sea of red that you see, a weak day in the offing clearly. PSU Banks, which was the winner of yesterday's trade, is down by 2.77% and is seeing the maximum pressure being built up. Realty sector follows 2.5% down. Healthcare sector follows 2.09% down in trade. Nifty Media, mid-cap 100 index 1.8% down as well. So it's the broader markets also that are coming under pressure. Both the mid-cap and the small-cap 100 indices down by over 1% as well. So you can see pressure building up from there too. Financial services, private banks down in trade. So the heaviest weighted stocks are also contributing to the decline in the markets when you talk about the major banking names in trade today. IT sector 0.9% down in trade. Oil and gas, consumer durables, FMCG, you name it. It's a sea of red today. On the stocks front, when we talk about the Nifty stocks that are contributing to the decline today, definitely sharp declines being seen on Axis Bank. It's 4% down in trade, also contributing to the Nifty fall today. Ultratech Cement, SBI, IndusInd Bank, Sun Pharma, L&T, Apollo Hospitals. These are the top 5 losers when we talk about the Nifty draggers today. On the upside, very few and far between stocks, just about handful of them, 5 or 6 stocks that are holding up into the green despite the fall in the markets. Adani Enterprises as the top gainer, 2.7% higher in trade. Nestle follows it, 2% higher in trade. Eicher Motors, Hindustan Unilever, HDFC Bank, that's the one that's trying to help stem the fall in the markets, 0.9% higher in trade. Britannia, BPCL, Asian Paints, these are the counters that are still holding up in trade. From the broader markets, the Nifty 500 universe, you do see stocks like Adani Wilmar up in trade today. Avenue Supermarts, 4.5% higher. HEG up in trade. Hoodco up by 2.5-3%. Graphite India up in trade. Adani Power up in trade. Imami also up in trade right now. CE Infosystems continues its upward run. You do have Endurance Technologies and some of these stocks from the broader universe that are holding up despite the overall weakness in the markets. But let's welcome our guest on the show right now to understand what is behind the fall that you're looking at into the markets right now and how should you read it. Kranti Batini joins in, Director Research at Wealthman Securities. Very good afternoon to you, Mr. Batini, and thank you so much for taking the time out for this discussion. Your take on the markets, what are the key reasons you feel are behind today's fall? And do you also believe that this fall could get extended into a deeper correction as we go forward?
Yes, Sakshi, good afternoon. Sakshi, yeah, it is, I'm in the camp of, it's basically mainly accentuated by the global cues, big global cues, and the news, the negative news, the bond yield rise and the high interest rate environment from US is creating more pressure on the market. It is more uh, about the overseas factors than the domestic factors. Indian economy, we are shaping up well. Our domestic GST data, if you observe, it has been rising up. The tax revenues have been going up, and the growth prospects also doing very good with respect to Indian economy is concerned. Whereas the spoiling spot for Indian economy at this point of time is the crude oil prices is one of the key concerns. But by and large, right now it is more about the global factors that are playing on Indian markets, creating extra pressure on Indian markets at this point of time. But Sakshi, to ponder upon the things at this point of time, what I can say is there is no, it's a sharp correction. We can't ignore this correction. It is very sharp. Yeah, but at this point of time, what we can see is if the market sustains above this level, there is no problem. But if at all it breaks the level of 19,000 level, okay, that create some more extra pressure on the market at this point of time. But I'm in the camp. Indian market definitely is a good opportunity to buy on dips. Uh, of course, we have outperformed the global indices when we compare with the emerging market space as well as the any other market. Indian market has been outperforming. So when these kind of knee-jerk reactions do come in the market, so the best performing market can witness the highest amount of profit booking. So the long-term setup in India is quite strong. The domestic high frequency indicators are quite strong in India at this point of time. Also, there is nothing to worry. There is no key cause of concern. The long-term setup is in line, but the global cues have been creating some kind of extra pressure on Indian markets at this point of time in a medium to short-term perspective. We are
What is the ideal
heading
strategy
into
then, Mr. Batini? What is the ideal strategy to have amid this kind of a global setup for the investor right now?
the ideal strategy is actually okay. Stay. There is no reason to do a panic selling at this point of time. Just stay on with their chips. Okay, when there is a if the investor is sitting on a more leveraged position or the stock valuations are stretched, okay, he can book some profit from the table. But there's nothing to worry at this point of time. In fact, these kind of sharp falls in the Indian market gives a very good opportunity. Couple of days back, we witnessed a sharp recovery in Nifty. We were heading towards 19,700, but the global cues have created the selling pressure at this point of time. So
Right.
it is helpful for the delivery based traders and good for the investors also. Definitely, it's a buy on dips and sell on rally markets.
Okay, but I want to understand from you, last 4 or 5 months when we've seen the markets rally, number of investors would have been sitting on good amount of profits if they have invested in good quality stocks, or even on the index level, they have made considerable amount of gains in the last 4 or 5 months or so. For them, what would you advise? Is it time to start booking out some profits, start building on some cash, even if the markets were to give you some dips, start deploying that money afresh?
Sakshi, it is the tendency of a normal trader have to do. Whether the long-term investors are concerned, they need not have to worry. What's happening in Indian markets and markets across the globe? The bull markets are having a longevity. The time of the bull market has been going up, whereas the sharp corrections are very sharp, but the time span of these corrections are getting narrowed down. But always in market, what happens is when markets are going up, markets will take the stairs. Okay, whereas while markets are coming down, they will take the elevators. Okay, that happens in any markets. The prices when it's rising, it will rise slow, but when it's falling, it will fall fast. But the time, what's happening is that right now the corrections are getting shorter and the expansions, the rallies are getting wider. That's good for the investors. So the investors need not have to worry at this point of time, but traders need to have stop loss at this point of time. If the market breaches 19,200 levels, they need to have a strong stop loss, and they can exit their long positions or book profits in case if they are in profit. But the long-term investors are concerned. Indian markets, the market trend is in positive zone. There is nothing to worry. There is no panic is needed for the long-term investors are concerned at this point of time. And and they can hold on to their SIPs. They can do the stock systematic investment plans regularly. There is nothing to worry.
Noted. Noted. Nothing to worry and no panic stage, and in fact continue your SIPs as well. A wise word right there from Mr. Battini for all the investors. But let's discuss some pockets where investors can still find value in this kind of a dip in the markets as well. Any particular sector that's come on top of your radar where you believe that right now is the time to start deploying money at this point in time? Would you be more comfortable with financials, or would you actually go with the subsectors which have been constantly in a sectoral rotation zone? Any particular sector that has attracted you?
Sakshi, banking and financial services, they consolidated very well. In fact, public sector banks have outperformed the private sector banks. It's a very contrarian in Indian markets. So the private sector banks have had a very good consolidation, but the rising bond yields and all creating extra pressure on banks in the medium to short term. Whereas the credit growth is concerned, despite of high interest rates, the credit growth has been robust for the banking Indian private sector banks at this point of time. So if the investors have a longer term perspective, definitely banks at this dip, at this correction offers a very good value. You are showing on your screen, HDFC Bank offers a very good value for the investors for a longer term perspective. And coming to the medium to short term, one can look at the names in capital goods, engineering, infra, and defense has been, despite of these corrections, okay, defense has been resilient in this correction phases also. So any dip that offers names like Cochin Shipyard, Garden Reach Shipyard, Mazgam Dockyard, and Hindustan Aeronautics, recently it had a stock split also. So these are the names one can look forward for a medium to longer term perspective, and these declines one can add in these names.
Okay, let's discuss some buzzing stocks today. Adani Group stocks are buzzing today despite the overall weakness in the markets. Adani Enterprises is the top gainer, 3% higher in trade. From the broader universe, we have Adani Wilmar, that's almost 6% higher in trade, trading at 352. We have Adani Power, that's again up 1.8% in trade as well. Your thoughts on the Adani Group stocks, any of the stocks that you believe that are looking positive at this point, investors can continue to watch out for?
Yeah, Adani Enterprises, it had a strong consolidation phase actually from the range of 2,300 to 2,500. The stock has had a strong consolidation, and the remaining other stocks also, they reached their bottom level of the price. So, and the news with respect to Adani Enterprises is the IHC, which is the Abu Dhabi Investment Corporation. They increased the stake in the last quarter. So this news has been quite creating some kind of buying interest with respect to Adani Enterprises, and also with a longer term perspective, they can unlock the value with respect to their ports, airports business, and also the data center business and other incubating businesses Adani Enterprises is making in the Adani Enterprises. So other stock with respect to Adani Energy Solutions is also doing strong with respect to their business is concerned in power infra, but the valuations are not cheap despite of the stocks corrected from their peak. So some kind of high risk appetite investors, they have been playing accumulating these stocks in the bottom range. These investors need to always remember these stocks are high beta in nature. Investors who are comfortable with high volatility can be suitable getting into these kind of names at this point of time.
Okay, let me then ask you about the other spaces where buying action is emerging. The consumption space is picking up pace. You know, when we talk about the retail stocks, Avenue Supermarts, V-Mart, they have reported their Q2 business updates, and we are seeing both these stocks up in action. Avenue Supermarts share, it opened 2.5% higher, shot up to 4.5%, right now trading at the day's high level at 38.91. The company said standalone revenue for the September quarter have risen 18.5% year on year to 12,308 crore rupees. And when we talk about V-Mart, their revenues have grown 8% year on year to 549 crore rupees. The stock also gained in the initial trading action again after the news was coming out. Then we are also looking at an entire basket of the FMCG stocks back in focus. Stocks like Nestle, Britannia are providing some support in trade today. We're also looking at, from the broader universe, stocks like Imami buzzing in action as well. How are you looking at this entire consumption theme, both retail versus FMCG business, and how would you advise investors to approach these two packs now?
Yeah, it looks very interesting, Sashi, and we are quite bullish with respect to India's domestic consumption story is concerned. Uh, uh, if you see the Avenue Supermart kind of stocks, the stocks have been in a long consolidation phase. Of course, the stocks valuations are um, uh, quite stretched always with respect to the valuations are concerned. But despite of the high valuations, the stock completed a strong consolidation phase, and for the retail and the consumption story is concerned, the monsoon is quite good. And if you observe the GST numbers, the GST data has been so robust. It is up by year on year 10% and above 150,000 lakh crores. Okay, that 1,50,000 crores. The GST collection, it shows the strength in the consumption story. That's the reason we can see the numbers from Avenue Supermart, V-Mart, despite of different business models they follow, we can see some kind of resilience in these stock names at this point of time. Given the kind of the strong management and also the business models they have, Avenue Supermart remains our top pick with respect to the domestic retail consumption franchisee is concerned. They have slightly tweaked or changed their business model at this point of time. Earlier, Avenue Supermarket used to have a larger space, larger shopping centers, stores. Right now, they are coming up with a small mini DMart mini stores. They are trying to penetrate into the small urbanized localities. So this has been paying very well, and they are also slightly moving towards online sales. So this is taking the advantage from the online marketing they want to do. So these are the things. The business models have been they are changing quite resilient with the changes in the consumer behavior.
Okay.
So Avenue Supermarts should be on the investor radar for a longer term perspective, and they have the real estate assets also within their core business portfolio, which majority of the stores are held by on their own. So these are the extra modes the company enjoys on a longer term basis.
Okay. Okay. Many thanks then, Mr. Batini, for being with us on the show and discussing all these insights with our viewers on the market level. No need for panic right now. There are dips being seen. There could be some more dips extended beyond this as well. But one should look at these dips only as a buying opportunity and deploying money in fresh, fundamental, good stocks at this point in time. Several pockets we've discussed, financial names, consumption space as well, both retail, FMCG action as well, and overall on the markets as well, the kind of strategy that you should follow from Mr. Batini. Thank you so much for being with us on the show. And with that, we will wrap up this special edition for you, but we will continue to monitor the market move. And at this point in time, what is the wisest thing that you should do in case you're an existing investor? As a fresh investor, where exactly should you be looking out for opportunities? Everything throughout the course of this day. So do stay tuned onto Business Today TV.